Welcome to Inside the Vault Knowledge Hub. Join us as we answer all your burning questions, from precious metals to second passports and IRA investments. Each episode, we tackle a new topic and bring you insights straight from the experts. Let's dive in and unlock the knowledge together.
Welcome to Inside the Vault Knowledge Hub. This is where we discuss all things our clients have asked us over the years outside of and including precious metals. From second passports to IRA investment, we will take a different topic each episode and bring you the answers from the experts themselves. In today's episode, we sit down with Petri Bassin, founder of HashDirect, a digital asset governance firm here in the Cayman Islands. Petri has an extensive experience in both finance and IT and is here to shed light on this new digital frontier of digital assets and cryptocurrency. Petri, welcome to the show.
Thank you very much for having me. Looking forward to the conversation.
Yeah, it'll be an interesting one, especially given the parallels between crypto and in particular Bitcoin and precious metals, in particular gold. I want to just start before we get into that, talking about your background, obviously very extensive background in traditional finance and the IT side. I want to know how you got into the digital asset space and tell me a little bit about HashDirect and what you do there.
Definitely. So as you say, background in finance and IT, so chartered accountant, but quickly realized that accounting, I think wasn't for me, but then also that the accounting industry was being threatened by the IT side. So did IT and cybersecurity qualifications, moved to Cayman, and in 2016-17, I was at KPMG auditing hedge funds, and a few of those funds were holding Bitcoin as an investment. And in the 2017 bull run, that became a very significant amount very quickly. So I had to figure out, how do you audit that? So how do you prove someone owns Bitcoin that's held in a self-custody wallet, which sounds easier than it is, it turns out. So helped to create all of their audit methodologies, built out all their tools, so signing tools, block explorers, to actually prove that Bitcoin exists. And it was a very interesting ride. Got to see some very cool security facilities, how people think about security. And I think this is almost where some of the parallels to gold come in. I've been in multiple vaults in multiple locations where people were storing gold, but also storing seed phrases and private keys for crypto assets. And then started Hash Directors at the end of 2020. So sort of got up to a director level at KPMG, realized that I'd like to do my own thing, and then started Hash Directors, where we're sitting as directors providing guidance, corporate governance to Cayman-based foundations, funds, holding companies. And in that period, started the Blockchain Association 2018 and also the Cryptocurrency Security Standard, sat as the chair for a while. So very involved in the industry, but also thinking about how do you secure these assets because it's very new.
Yeah, and just hearing you say all that, I'm like, we could not have been speaking to a better person to talk about this. Shameless plug before we get into the next question. SWP, here we also not only store precious metals, but do allow our clients to store cryptocurrency seed phrases within our vault as well. But you said something really interesting there when you were talking about, your shift from working at KPMG and working with these hedge funds. You said, how do you prove that Bitcoin exists? And that's an interesting juxtaposition with something like gold that is physical. It's there, you can touch it. And I'm just kind of curious, one of the reasons that people invest in gold is because of its permanence. Obviously, crypto, there's, a trust element involved. Do you think that, blockchain technology and Bitcoin either has earned that element of trust, or can it earn the same level of trust for investors?
I'd say of all the assets out there, Bitcoin is probably the one that I'm most confident in saying yes, because of the nature of Bitcoin. Not having a specific founder, sort of, I don't want to call it grassroots, but being built from that base. The nature of the Bitcoin blockchain, a lot of people have criticisms against it, saying that, there's not a lot of innovation, we're not building new things quickly enough. But Bitcoin for me is that really secure, really stable. You can really rely on it. Bitcoin has never been down. It's never been hacked. So to almost answer your question, due to the pure nature of it, also how decentralized Bitcoin is. I'm happy to rant on how some chains are actually very centralized and not that secure. I think Bitcoin's the one where everyone is very confident to say this is very decentralized, and no government, even if they throw all their resources at Bitcoin, could compromise it. So just bringing that into the calculation, I'd say yes, very confident in saying there is permanence there. It's not physical permanence, it's digital permanence. But money has been digital for so long. I think we just don't realize it. I mean, if you're familiar with fractional reserve lending, you realize that there isn't actually physical money to most of the things that we're dealing with.
Right. And that's a really good point. And for, you know, the new investor, let's talk about the person that's just getting into, you know, or is curious about investing in crypto in general. What do you think are the most, you know, beginner friendly, but also the safest ways to both purchase, you know, store and secure their cryptocurrency? I know I have my own thoughts, but I'm curious coming from you as the expert here.
I think for brand new investors, what I always recommend is using an exchange, just because there is some centralization there. If you lose your password, you can reset it, etc. So it's a good way to get access, start using it. But then the immediate step after that, I always recommend is create your own wallet, move assets off that, get a seed phrase, go through those steps. It's good just to understand that. The sort of big qualification here is you are your own bank, which also means you are your own bank. There is no help. There is no anyone that you're going to call. If you send the assets to the wrong address, they're gone. If you lose your seed phrase, the assets are gone. So I think using a centralized party, whether that's an exchange or custodian to start out with, is a great place to get going. But then maturing to that be your own bank stage, which I think is what's appealing to a lot of people in the gold industry as well. You can actually control your own assets. And you can move assets very easily. That's one of the, you know, comments against gold is moving my gold bars, putting them in my suitcase isn't that easy. With Bitcoin, you can easily move those assets, travel with them. I mean, there's lots of creative things people have come up with. But yeah, start out centralized and then explore and start going to a more self-custody model.
Yeah, exactly. And it seems difficult. There's a wealth of information out there, you know, to understand how to create your own wallet. And to go even further, if you bought a hardware wallet, for example, which is the safest way to do things, you know, we saw with FTX a few years back now, you know, it seemed like the biggest and safest exchange to buy crypto and hold with. And we saw how that turned out. So for smaller amounts of cryptocurrency, sure, use an exchange, keep some funds there, that's fine. But if any meaningful investment, you definitely want to learn how to self-custody. And my favorite adage is be your own bank, but you are also your own security, like you kind of said as well. I had a follow-up question to that. When getting into crypto, you know, is it kind of like gold and silver where, you know, it's 80% gold and 20% silver or, you know, other precious metals? Do you recommend, you know, other crypto assets out there? Or are you predominantly Bitcoin?
Ooh, that is a loaded question.
It is a loaded question. And I mean, there's a lot to take in there, but is there anything else that you kind of have your eye on?
No, I'd say in terms of sort of the Lindy effect, what's existed for the longest time is most likely to exist for the longest time. Bitcoin is definitely the asset that has been there. I mean, we've seen ETFs, listed companies investing significantly into Bitcoin, etc. So for anyone, I'd recommend that be your biggest asset and largest investment. Then you start going down the list. Ethereum is next. I mean, very large, very good development. A lot of critique at the moment in terms of what they're focusing on, where they should be focusing and what they should be doing. But at the moment, I'd say still one of your core chains. A lot of layer 2s building, the EVM standard, which is just how smart contracts talk to each other. It seems to have become sort of an industry standard if you want, you know, access to multiple chains. And then after that, I mean, there's a long list of different assets. Solana is very popular, but it's been mainly used for meme coins. There's a lot of interesting development going on there at the moment. So I'd say Solana is interesting. And then what I normally say to people is look at things, and this is almost like traditional investment. Look at things where you understand the use case, you understand the underlying technology. This is still a very volatile asset class. So you will probably see huge downturns. And if you don't have conviction, you will sell at the bottom, you will buy at the top, which is the classic human nature mistake to make. Bitcoin, I think, is a fairly easy one to stomach that and get used to it. And then after that, yes, look at this like any other portfolio. Diversify, I mean, put some assets in some blue chips. And then, I mean, we all like to take those gambles on smaller projects, but be aware that, I mean, this is very much an intention economy. You may have projects that are technically sound, but they can't manage to keep people's attention. And that's unfortunate. And I see founders struggle with that day to day is, you know, brilliant founder, really technical, but they don't understand that it's not build it and they will come. It's build it, shout about it, and then they'll come.
Yeah, no, absolutely. That's a very good point. And I think, you know, you mentioned something about being able to stomach the downturns, and wanted to talk about Bitcoin as far as like, you know, a macro, and it's behaving more like a traditional asset recently. It still has, you know, outsized downturns and uptrends as well. You know, it'll move 10% a day, but that used to be 20, 30%, you know, all in one day. Do you think that Bitcoin's become a more mature investment and is a little bit more reliable than the rest of the asset class?
Yeah, I'd say with any asset class, as it grows, it becomes more stable. So, I mean, I don't have the numbers in front of me, but if we look at Bitcoin's sort of total value from the previous cycle to this cycle, with ETFs, you know, other firms investing in it, etc., it has, as a total asset class, become much larger. Therefore, for it to have these large movements, the amount of capital that needs to move is much larger as well, which I think is good in the end. It starts making a more stable asset, and it doesn't have these huge fluctuations, which, I mean, for retail, for regulators, that's really scary. So we are going to start moving towards that. And I'd say it's purely a function of the size of the sort of entire asset class these days.
Yeah, that's interesting. I kind of wanted, I'm bouncing back and forth between Bitcoin and the rest of the asset classes, but for a more seasoned crypto investor, you know, you've got the new person that comes in, buy, hold, and you know, hopefully stick it away in a safe wallet. For those that are a little bit more active and understand a little bit more, you know, there's other opportunities out there. And one of those is DeFi, decentralized finance, which, you know, again, you mentioned being your own bank. Wanted to ask you, you know, to chime in on what DeFi means to you, what opportunities are out there, and, you know, do you use DeFi? Do you recommend it for someone that's a little bit more seasoned to investing in cryptocurrency?
Yeah, I'd say, I mean, DeFi is probably one of the most interesting innovations that we've seen in the last while, especially when we had very low interest rates. DeFi was very appealing because you were potentially getting a negative return or your fiat that was sitting in a bank account. But in DeFi, you had different, you know, tools, different ways that people were generating yield. At the moment, one of the most basic things is with stablecoins, where people are actually sharing some of that yield with the holders of those coins. And then you go down very complex lending protocols, swaps, lockups. You know, you can, you know, almost build a tower of, you know, locking things up using those same assets to lock it up, etc. So it gets extremely complicated. What I will say is there's great opportunities, but if you are playing with DeFi, you need to understand that you need to manage it very actively. These are smart contracts. So if there are big price movements, you will be liquidated. So you need to be aware of your risks and how you use it. What I think will be interesting is, especially with the stablecoin regulations, as the US has changed their viewpoint, I think we'll start seeing some traditional finance companies move into the DeFi space. There will be pools that are fully regulated where eventually, I mean, I'm sure you'll have, you know, this traditional low, medium, high risk, you know, options at a digital bank, which at the back end, there's DeFi protocols running with different risk parameters. So you'll see much larger pools, but we're not there yet. Eventually we'll get there. At the moment, it's still do your own research, be your own bank, and take your own risk.
Yeah, exactly. And that was the perfect segue. I wanted to talk about regulation. Obviously, the Trump administration comes in. They say that, you know, they're going to make USA the hub for crypto and push along the industry. we haven't seen a whole lot of new regulation from the U.S. I'm just curious what your thoughts are for the next 12 to 24 months, not only within the U.S., but globally, where you're seeing adoption and, what other countries you're looking at.
So, I mean, starting with the US, I think given the size and complexity of the US, it's hard for them to move quickly. Sentiment has changed. We've got a lot of good people in great positions, and they're trying to make change happen. But given the sort of federal and then state requirement for certain regulations, this is not a quick moving beast. I think the stablecoin regulation they're talking about is very good, but you're already seeing some rhetoric from the Democrats that this is bad, there needs to be KYC, etc. So we'll have to see. Maybe things get pushed through very quickly, which can be positive. But I think it's important to be cautious here. This regime is in power for 4 years, most likely, and we're uncertain about what's going to happen afterwards. If there is going to be retaliation, etc. The US is very divided at the moment. In terms of regulation internationally, I mean, I'm going to be biased, but Cayman has had its VASP Act since 2020, very stable, very secure. I think that's why we've seen a whole industry grow here. Government is sort of very objective about it. I think the regulator has a great team. They're prepared for regulation. Exchanges and custodians now have licensing in Cayman. So there's a lot of good opportunities to be regulated here. In terms of the rest of the world, I'd say the EU with MiCA is difficult. It's making innovation difficult. You're seeing teams, try to move to other places where it's clearer in terms of what they need to do. I was recently in Dubai. Dubai is very interesting because you have regulators almost competing with each other in different zones, and there's a lot of free zones, etc. But also that makes it confusing. Spoke to a few people where it's like, if I want to set it up, I need to register for this one here, for this here, and do the other one. So it is a little bit confusing and difficult at the moment. But I think we're seeing regulators being more open to this, have the conversations, really start to figure it out. This is brand new. And I always draw the parallel back to the stock market, where the stock market was almost unregulated for hundreds of years, and then the ACC and everything else got set up. If you look at crypto and the lifetime, we've grown and iterated extremely quickly. And we are now in that more regulatory heavy phase where people need to wrap their heads around it and figure out how this is going to work. And some of these things aren't like other things. You can't say this is a security or this is a commodity. It might operate completely differently.
Yeah, it's interesting that you say that, because I've had conversations with people and they're saying, Bitcoin's 15 years old now and it hasn't been adopted yet. And, it's dead in the water. And you go, it's a marathon, not a sprint. This is a completely new asset and it's going to take, like you said, completely new regulation and people working tirelessly to aid its adoption. I think that we're at the precipice of that, but it's still, that doesn't mean that it's 2-3 months away. It's still going to take some time to gain any meaningful traction. And it'll be interesting to see where we go from here. In closing, this has been a really insightful conversation. I definitely want to do this again and we can dive even further into the weeds. I wanted to get your thoughts. If you've got, 1, 2, maybe even 3 trends in the space that you are thinking will explode over the next, 3 to 5 years, what are they and why?
Very interesting question. So I think the first one is what I've already mentioned, and that's stablecoins. I'd say bullish on stablecoins at the moment if the regulations turn out correctly. I think stablecoins can be that next sort of catalyst that push a large inflow of capital, because stablecoins can be a gateway drug for the average person to use crypto. They're going to use it. It's going to be just like the dollar, but they're going to realize that it's much quicker, much cheaper, and much more secure. And then people are going to say, well, oh, this thing really works very well, and go down the stack, potentially start looking at other assets and get into the asset class. So given regulation, I think there's a lot of potential there. We're seeing a lot of projects come in with, good solutions, sharing better yields, etc., in the stablecoin market. The other one that's a little bit a weird one is just the maturization of the space. We've seen it with the clients that we work with. The general team coming to you is much more mature. They're thinking longer term. It's a much bigger picture thinking. You're seeing that with the foundations. You've got, full segregated teams in the foundation, always full compliance, KYC, AML, screening people that are sitting on councils, etc. And I think that's one of those things people don't realize is going on. You hear about DAOs and DeFi and you think it's the Wild West out there. It's actually more mature than people think. There are contracts behind things, there's real human beings, and that maturization is just going to continue. So I think that will then combine with sort of institutions getting into the space. With the rhetoric in the US changing, you've seen a lot of institutions realize, BlackRock is the obvious example, that this is a whole new asset class. They're going to start moving into it. And with that, I'd say the last one is tokenization. Because as they start realizing this is more mature, they figure out the regulations, how to run these things, we are going to see, I don't want to call it the tokenization of everything, but you'll see a large increase in tokenization. I think with tokenization, the challenge still is secondary markets in terms of if I have my tokenized stock, property, bar of gold, artwork, whatever it might be, I need a secondary market where I can actually trade these things. And that for me is the one thing that we still need. And I think that's more a human problem than a technology problem. Creating the marketplace is possible, but getting everyone to agree where they're going to trade is going to be challenging.
Yeah, totally. And I'm really glad that you framed it that way. And you said the tokenization of things. That was a bit of a test question. I wanted to see if you would mention what are colloquially known as NFTs. Now, people think that purely just means, a cartoon stick figure that somebody pays $50,000 or more for, but it means so much more than that. So as a final question, I wanted to talk about tokenization and NFTs, so to speak, and you can, tell us what NFT actually means, but there are so many use cases for that technology moving forward. And I wanted to get your thoughts on that in a little bit more detail.
Well, I'm not going to lie. So I've got some NFTs behind me on the wall over here.
So do I in my home office.
Yeah, so I have gone down the stick figure that also plunges in value rabbit hole and participated in that. But I think maybe just to bring it back, so NFT, non-fungible token, and what non-fungible really means is there is only one of that specific one. And that's what makes it a unique asset. That's why you can put your house on there and that there isn't a bunch of copies. So $1 is a copy, very similar for all of them. They might have a unique serial number, but a house is a very unique asset, and that can be represented with a non-fungible token. And I think the use for NFTs is we're just hitting the sort of the tip of the iceberg. I think one of the most interesting use cases I've seen is potentially doing structured products. So if you're thinking about 2008, all of the structured loans and everything, the problem there was no one had an idea of what the underlying was when you were buying those structured products. With an NFT, what you can do is you can actually include all of that information. So when you're buying something, that NFT, you can encode all of that information in it. So I can actually look at it and say, well, this doesn't quite make sense. Look at these loans that are in here. And that transparency for me using NFTs, I think, is going to be revolutionary. Again, it's going to be some time for people to adopt it and actually accept it and use it. But I think once we get there, we'll build a much more robust financial infrastructure where there is that transparency. People can see what there is. And due to the nature of the blockchain, no one can manipulate it. No one can, tweak things, mess around with it. You've got a full history. You can see where it's been transferred, who's owned it before. So it's actually more secure and more compliant. That's the one thing that always catches me is, crypto is only for scams and people stealing things. It's actually the worst place to do that because there's a public blockchain where anyone can follow your transactions. With bank accounts, you run into walls and people can't trace the assets any further. Over here, it's all transparent. So I think it's even better in terms of compliance and other factors.
Yeah, I would agree. And I appreciate that insight and demystifying what NFT actually means. The thing is it is art at the end of the day. I mean, you look at Christie's, they're selling NFTs, they're doing NFT auctions that are selling paintings and artwork for millions of dollars. But it has, you know, the term NFT has gotten a bit of a bad rap. And I think that, you know, people really wake up to what that means and what the tokenization of other asset classes and other things will be over time. But yeah, a super, super insightful conversation, as I knew it would be. Petri, thank you very much. Before we let you go here, I wanted to give you the opportunity to let our viewers know where they can follow you, where they can find you, and follow your journey and try and gain some more knowledge that you've provided today.
Yeah, no, definitely. I'd say, I mean, hashdirectors.com is our website. People can, you know, reach out over there, find my email address there. Just Petri Bassin on LinkedIn as well. Post a lot of thought leadership and things there. And then P3B on Twitter. I don't participate in all of the Twitter fallout, etc., but we do try and post over there fairly frequently.
Awesome. Well, thank you very much, Petri. We appreciate you, and we'll definitely do this again soon.
Definitely. Great being on. Thanks.
All right. Cheers.
Thanks for tuning in to Inside the Vault Knowledge Hub. We hope you enjoyed today's episode and found it to be insightful. Be sure to subscribe and share your thoughts with us. Join us next time for more expert advice and answers to your questions. See you next time on Inside the Vault Knowledge Hub.